And that means we are now live here on our YouTube channel. It's our daily show we call the Halftime Report, where we go through the markets one step at a time, taking a look at the indexes, commodities, cryptocurrencies, companies in the news like earnings season, where we do earnings roundup. Anything else grabbing our attention, upgrade, downgrade, you name it, break it all down, analyze it for you guys so that you can better run your daily routine as a trader and an investor. Welcome back to the show, everybody. If you are a veteran of the community, you know what we do right when we get started. Hashtag Team Tackle is our official hashtag because that's what we are here at Tackle Trading. We're a team of traders that are helping each other out on a daily, weekly, monthly basis, moving ourselves forward through these markets, and excited to do it. Excited to be here on a Friday. I got a fun show again planned for you as always. Got Coach Frank coming back to the show. Frank, how you doing today, sir?
Doing well. Thank you. Always a pleasure to be here. It is earnings season. I really, last week I knew I was getting warmed up. This week I'm like, can it just be next week at this time? Now we've got like a third of the S&P 500 companies reporting next week, including some of the huge ones, right? Microsoft and those huge companies. So yeah, I'm excited for next week. I got the NFL draft. I got earnings season behind me, but I'm happy to be here talking trading always, even during earnings season. I'm happy to be here.
Yeah, this week was a busier week than the week before. Obviously, we had bank earnings last week. We just had more companies report across a broader spectrum of industries and stocks. Next week's going to ramp up even more, Matt. And, obviously when we're in the heart of earnings season, that's going to impact the way we think about markets. We always start with those type of conversations, how earnings are doing. But, we've been moving through the season here, a couple weeks down, and we got a few more companies here to round up. Matt, pleasantries first, though. How you doing today, sir?
Tim, doing absolutely great, fantastic, excited to be here with the crew to break down the market activity here.
Yeah. And activity, there is for sure. In fact, I really love what I'm seeing here in these markets. It's obviously been a back and forth week, down a day, up a day, down a day, up a day, but holding support in a very tight consolidation up near the high of the chart. We're within just a few points of the all-time high here, heading Friday into the weekend where we might be seeing some breakout setups potentially developing here. Matt, let's start with you first. How are you reading the price action up here on the top?
Real simple. We asked for it. We got what we asked for. Now let's see if we can execute the next step of this trend and this pattern. You came into the week with a reading on the market that was slightly overextended. We talked about the potential of a high base or a flag forming as you start to get a little bit overextended. And quite frankly, you got it pretty clean. It's a choppy little last 4 days. There's no doubt about that. Up, down, up, down, up, down. But the beautiful thing about this pattern is despite the increasing chop that you've seen over the last 4 days, you maintained your pattern. You maintained, the resistance areas at 4,100. You maintained a fairly clean trigger right there at about 4,180 in the market. And so you got this tight range. And again, you got to be a little bit concerned about the up, down, up, down, up, down nature of the market. But that's not too surprising given the fact that you are overextended. Again, I'm going to focus, at least for myself, I'm going to focus on the consistency of the pattern here. And you're threatening that breakout of the high base. And again, Frank, Monday on the halftime report, we were sitting here and I'm like, yeah, we're overextended. Hopefully we get a high base. If we get a high base coming into the scatter report this weekend, we're going to have some pretty clean charts. Now, you do have earnings that you got to navigate next week, but you got what you wanted in the market. You got a pretty clean setup, high base type scenario. Frank, what's your technical read on the
market? I mean, we needed this, right? You said it best. I mean, we were extended. I think you could still argue we're a little bit extended, but just this 1 week of taking it off, right? Because it has been back and forth, but it hasn't gone anywhere, right? And so it gave sellers opportunities to take some of those profits. They weren't really all that quick to do so. Buyers coming right back in anytime they even started. I really do like the fact that we've kind of hung around a little bit, consolidated. We needed a breather, I believe, with it being extended, at least a little bit extended going into this week. Like you said, I mean, this is kind of what unless we had, more traditional pullback, right? Which was probably never likely in the cards, right? Certainly not the way it played out. This is probably the next best thing, right? Instead of the, four, candles on declining volume into support with the doji here today, right? I'm sure I would rather have that, but I will take this for sure.
It's really the eye of the beholder at that point. Do you like that flag where you have to fight up against some intraday resistance, or do you like that clean breakout on a high base? Both are very, very, very good patterns. And
Absolutely.
you did get your high base, and the reason why we like high bases is exactly what you're seeing on RSI here. You don't have a vastly different price today than you had, say, a week ago. In fact, it's a very similar price that you had a week ago. But due to the consolidation and the time frame in the consolidation, what happens with your indicators is they actually come down. They don't consolidate to the same degree as the price does. You see RSI come down. Now you're under 70, clinging right there at about 67. You're in that breakout scenario where you have an RSI underneath 70 that could certainly cross back up and be overextended fairly quickly, but you're technically fine there though. That's what the consolidation does, is it allows all of us, think about it like this, it allows all of us traders that are just trading throughout this environment to kind of reset our systems, reset our patterns, reset our setups. You lock in a little bit of profit and you're basically resetting to do it again. And again, we're in the heart of earnings season. Obviously, there's going to be with massive names next week. I mean, just massive names next week. Let's see what do we got next week
Apple,
on earnings,
Microsoft,
guys?
Amazon, Google,
Yep,
Facebook, Tesla,
all of
Visa,
them.
Comcast, Chevron, Merck. I mean, it's a big list of big names.
Well,
Sure.
and this week was Johnson and Johnson and Procter and Gamble and Intel and Verizon and Coca-Cola. And yes, let's throw in a Netflix, but let's surround Netflix with AT&T, Abbott Labs, Danaher, and Honeywell,
Mhm.
right? You didn't have those big names this week to really kind of drive the market. Next week, you get the popcorn out because next week you're dealing with all of those Apple's, Microsoft, Google, Amazon, Facebook, Tesla, just a vastly different set of stocks out
Real
there
quick.
that can really drive the market. Yeah, go ahead.
Oh no, are those important companies?
Apple?
Okay.
I don't know. I don't
What,
know.
what is the market going to care a lot about
I,
those
I,
reports like Apple, Facebook, Microsoft,
I,
Google, Tesla? That
I
sounds important to me.
it's
It might be.
slightly more important than the value names we got this week. Okay. I don't think we're looking at a high base next week, given the names that are reporting.
One way or the other.
I think we're going to see some fireworks next
Yep.
week. But the market mentality going into next week and the technical condition going into next week, I felt just was very important to have a clean technical environment that absolutely could get blown up through volatility. But at least you got that going into next week. And even outside of that, though, obviously we're going to have to comb through those a lot of stocks next week for our scouting reports from an earnings perspective. But I love the market mentality right now going into next week with the consolidation. And again, the volatility subside. I mean, the volatility concern is there. Look what Bitcoin did. Bitcoin violated support. All of a sudden, there's not a whole lot of support there. Boom, 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 down.
Mhm.
We can see that in the market as well. It wouldn't be surprising to see the market come down to 4,000. But again, you gotta at least like the spot you're in going into next week. I think it's a clean technical setup.
Mhm. Yeah,
Absolutely.
and particularly on the S&P 500, which is up in this tight, narrow basing, kind of pattern. Let's flash through the rest of the indexes and just kind of compare them here, Matt. Just give me a quick look at all four of the big ones and tell me if you see any relative strength or weakness.
No, you haven't seen much difference in the indexes here. The NASDAQ is doing the exact same thing that the S&P is doing. We're just maybe slightly underneath the breakout channel, but you're really looking at the same degree of pattern in the NASDAQ that you're seeing in the S&P 500. When you're looking at the Dow Jones, again, you're seeing the exact same pattern, clean high base type scenario. The only index that has really separated itself is the Russell 2000, and it's just kind of hanging out with Batman.
It is, and we're still, and that Batman, pattern still is in play. Obviously,
It is,
yeah.
it is, but The only people that are really looking at the Russell 2000 right now are long-term investors who are saying, hey, let's recreate the magic of last quarter. Let's do this again. Outside of that, technically, this is a challenging environment until 2300 is achieved.
Well, those people and Coach Tyler, who has
I know
obviously
Tyler. I know Tyler was speaking his book a little bit
deep
yesterday.
love for the
We all
rut.
know that.
Yes.
Yeah, I'm sure Tyler's really happy with this sideways back and
Yeah.
forth nature of the rut as of late.
Here's Tyler. The story of the day is the Russell 2000, why the NASDAQ is like up 2%. No, I get it. We all speak our book. But no, I do think the Russell 2000 needs to break out of Batman, needs to reclaim 2300. And quite frankly, for me, I could care less what the Russell 2000 does between 2100 and 2300. It can hang out, it can party, it can dive, it can jump, it can do whatever it wants.
Mm-hmm. Let's take a look at the sectors next, if we can. Then we'll do commodities last. I know that on Fridays, the three of us, as well as the other coaches at Tackle Trading, we all get together after this show and we start talking about rankings and how we're going to be seeing the market moving in next week. Obviously, we like the price action this week as it's consolidating up at the high. Going to have an impact on many of these different sectors here, Matt. You want to take a look at sectors now or commodities now?
No, let's take a quick peek at the sectors here today as we kind of finalize the week here. Frank, last week we solidified that ranking in the S&P right there at about 10. When you see this consolidation on the week, what's your first take on it when you go into the ranking saying, okay, we were at 10 last week. We got the consolidation. You like the technical pattern a little bit more. You don't like the earnings coming up even more than this week. What's your read here, just from a rankings perspective?
This is one of those easy ones where I say I wouldn't upgrade it, but I like it more. It hasn't really moved, right? That hasn't really certainly given me no reason to downgrade, right? So you immediately know that you're not doing that. Even with earnings coming up, I'm not going to punish the S&P for that. I'm going to avoid companies that have those earnings. I might do a little less trading next week. I might start my barbecue preparations for the NFL draft on Tuesday morning. And
wait a sec. The draft isn't until Thursday night.
Well, listen, it's never too early to start.
Okay,
that's the beautiful thing about earnings season. When it's earnings season in April, it's my favorite of the earnings seasons because I have the NFL draft. I've got plenty of things to keep myself busy. It's the other quarters
I get it
that I don't know what to do with myself.
But I didn't know you were going to do a 48-hour preparatory party. I just
bring it up with earnings season. It's not don't bring it up with me. It's the earnings season, right? I keep waiting for you to get it to twice a year instead of each quarter.
I'm excited for the draft too. I just didn't know my excitement needed to be at that level.
Well, see, that's how I feel about earnings season. You should just be happy.
That's how much you dislike earnings. Okay,
just be happy. I'll be available till Tuesday morning, right?
This is true
because then it's the second half of the week. That's where it just gets nuts next week. But I do, this is one of those scenarios for me. I like the price action. I think it's set up better for entries and trades as a whole next week. We held support. We didn't break resistance. Not a bad thing by any means. But for me, this is always one of those, I like it more, but I wouldn't upgrade it type of charts, right? You see those a lot, right? Where
you do,
you like it better technically, but really, like you said, I mean, plus or minus, it's about the same here today, price-wise, right, as it was last week at this time.
Well, and here's the thing. I mean, this is how I would approach it. Like last week, you're overextended. I wouldn't have upgraded personally, but you got to respect the price appreciation as well.
Sure.
And so you get that token 5-point upgrade to respect the price appreciation. But what you really are doing is saying, okay, I'm still waiting for that technical pattern to solidify itself. And once it does, that justifies the ranking. And so when you're looking at reestablishing that ranking today, that 10 is an absolute perfect ranking based on what transpired this week, because this is exactly what we wanted to. And that's a great way to put it. I'm not going to upgrade. I'm not going to fight for an upgrade, but I certainly like it more from a technical perspective. But the reality is price really hasn't done anything in the week. Little up, little down, solidified that technical high base pattern. When you're looking at the sectors, you're going to see a little bit of a similar type scenario this week as you did last week. When you're looking at a week where, real estate's up 1.8%, and healthcare's up 1.6%, but yet Communications is literally 0.04% up. Staples is negative 0.1%. Finance is negative 0.13%. Materials negative 0.25%. We're literally talking doji in the sectors outside of maybe energy, and even energy, broke that support level. That's where the 2% down happened this week, trying to fight back up against. We're going to have an interesting conversation on energy. But for the most part, this is one of those weeks where you're kind of chalk. Materials, nice little high base setup, good trigger above 83. Couple that with a couple stocks that are happening in that sector. CE right here, nice little post earnings, clean breakout channel. So you're going to have trades out there. There's no doubt about that, but they're just not going to be a lot of those brand names that everybody else is accustomed to trading, because let's face it, they all have earnings next week. You got to kind of wait for the coin flip to show you heads or tails before you see where the market's going to push those stocks. And so here in the sectors, I do think you're going to look at a little bit of chalk this week in comparison to last week, given the fact that this week solidified the price appreciation that occurred in the previous week. And so I do like it more, but I also agree with Frank that outside of, say, energy, and outside of maybe your real estate, healthcare, staples, your defensive type stocks, because your defensive type stocks have been doing fairly well in recent history, right? Utilities been doing really, really decently from a trending perspective. Good pattern here in utilities as well.
Utilities really stands out for some setups, right? Materials does too, really looks nice for breakouts. Utilities looks really nice for little shallow retracements. Of course, most of the utility companies have earnings too, but that's where these sector ETFs can really come in handy. I generally prefer to use them as my guide to, hey, let's go look at some utility stocks, and I will do that. But in scenarios like earnings season where I just don't want to have to deal with it, that's where I like these as tradable instruments the most. Most of the time, I just use them as kind of gauges and as my guide. But this is a good time of year to really show us some appreciation for the sector spider ETFs.
No, I certainly agree with that. And when you look at the short-term trend on utilities, you see nothing but consistency. You see a very good, healthy trend just developing that's sitting near support levels. So you got to like what's happening in utilities, whether it gets an upgrade or not. We'll wait for that discussion. I don't know if it will, quite frankly. I could see an argument to upgrade given the fact that you consolidated and you're, basically achieving that high over there at 67. So, I'm looking forward to the discussion on more, quite frankly, more the defensive sectors, because I think the aggressive sectors will be chalk.
Yeah.
A lot of them just consolidated this week, justifying the price performance. Whereas here on real estate broke out this week. It's forming a very clean, high base scenario over the last 3 days, where its support of 42 is solidifying itself. You got to like the price appreciation on real estate. You got to like the technical environment behind the XLRE. And so I do think that we're going to have a little bit more prolonged discussions on the defensive areas of the market, because those are the ones that, quite frankly, are a little bit in a better technical environment right now that doesn't have a lot of those names that's going to impact it. Like, for example, I highly doubt Apple is going to have that big of an impact on real estate and utilities next week.
Well, yeah. Well, even like the earnings collectively, real estate's not all that nuts during earnings season, right? So collectively, most of those things aren't going to probably do anything too dramatic. There's always somebody that's like, wow, did you see that? That's crazy. That was a read. But, it is usually one of the more mellow spaces. Those defensive ones in general tend to be a little more mellow on their earnings announcements.
So, I mean, the anatomy of a bull market is, everything kind of goes up over time, and it does look like, we're going to have some chalk in your aggressive areas of the market with some pretty decent technical setups to look at coming into the weekend. But I do think the prolonged discussion is going to come.
Yeah, and obviously some of that discussion is going to center around those defensive areas, like you guys just pointed out and kind of broke down. Healthcare is one of them that stood out to me this week, like you guys mentioned. Pretty strong performance out of the healthcare sector.
Healthcare and REITs, I mean, they're both looking very, very similar.
Yep. I agree. All right. Let's move through the rest of the markets here. Let's move into the commodity markets next. And Frank, I'm gonna get your read on this one first. Crude light. What are you seeing?
Well, it's one of those pullback of the pullbacks, right? So even though it was kind of a weirdly developing one, we had the deep pullback. We had our, two weeks of consolidation there in that, 57 to $61 range. We had that big day last week, kind of pushing us out of that range. Now we're getting on the pullback. If you really think about this chart, I think for me, it's support is down here at 57 approximately. Resistance is up there at 68 approximately. We're kind of smack dab in the middle as of right now. I think maybe you lean to the bullish side, but I think risk to reward is tough on either side that you might find yourself. I think you need to get back above that resistance that we put in earlier this week, up there in that 64 range, to get a little bit of clarity from a bullish point of view. From a bearish point of view, I don't know. I think it's too early to say right now. Maybe break the trend line that we've kind of started to establish, but that's probably stressing, pushing it a little further than I'd be comfortable with. It's still a stay away from me. I believe, as I've said many, many times, that when you want to be trading crude is when it's got a lot of momentum. And when there's any indecision on it, I don't like to mess around with it. It's too crazy for me. It's it's not even crazy. It's just not my jam, I guess.
Mm-hmm. And the back and forth nature of this thing over the last 2 months has obviously moved it into neutrality. You have to be a little bit impressed with the higher pivot low potentially, though, Frank.
Absolutely.
Right?
Yeah,
So,
that's a
respect
good
that just
sign.
a little.
That's a very good sign for the bulls. That's what they wanted to see, right? We had that nice breakout day, where we had a little bit of movement, very natural, some resistance forms. Very naturally, we pull back a little bit. We're early in that, but we've seen some upward movement off of that yesterday's low. So absolutely, that also kind of lines up with about what their trend line would be for whatever that is worth. Doesn't hurt by any means. Still would like to see them break that resistance, but I do agree with you, Tim. I do think that is a good step.
Mm-hmm. Matt, any thoughts?
Thoughts on crude?
Yep.
Yeah, I do have some thoughts on crude. You gotta like the increasing support. You gotta like that. But I just don't see a trade. I just don't see a trade. Because what are you gonna do? Put a stop loss under 16 targets, right? By 64, by 65, by 60, by 67, by 68 until it breaks out.
We're losing your mic, Matt. We are. Let me take the screen. Let's see real quick.
I'm going to blame earnings season for that, maybe.
Potentially, I don't know. We've been working on the issue all week. The audio is great,
yeah,
but it was that out for you as well for a sec there, Frank?
Yeah, he just faded out there. Yeah, kind of like he did last weekend. It had been solid for days on end, right? So you can blame me or you can blame earnings season.
Okay, am I still here?
Now we can hear you great.
You're loud and clear.
What I was going to say on crude oil is basically this: if we can go back to the CL contract, you got to like the increase in support. You got to like the moving averages crossing over, and you got to like that it found support on the 50-period moving average. Those things you got to like. And in a different environment that didn't have a tight resistance at 64, with another tight resistance at 65, with another one at 66, with another one at 67, and another one at 68, I would say I might have a different read here. Because you're seeing it, because that increase in support off potential reversals are a very key indicator that the buyers are coming in. They support the price movement. They have the thirst at the higher price threshold. All of these things are extremely positive. But crude oil, and it might be the fact that we've all traded crude oil for a long time and have seen very prolonged periods of consolidation. And this short-term increase in support just does not do enough to come off the stabilization argument for crude oil, for me anyways. A short-term trader could be looking at this exact same thing and being like, I love that slowing momentum on the 50-day moving average. I love it getting back above the 9 EMA. I love it reclaiming its moving averages. And I can certainly see that, and I would not fault any trader for doing so. Just for me, it's a tough trade from a reward to risk ratio, a probability perspective, and just the history of crude. And so for me, it's a stay away until we see a true trend develop and not just a minor increase in support within an overall intermediate neutral trend.
And just for your clarity, we're hearing you fantastic right now, by the way. I appreciate the analysis. Crude light, this little supporting bottom and obviously the little higher bit, Matt, I think that your context gives it, or your analysis gives it a lot of context here because it obviously is not completely out of the woods. Any real bullish analysis might start on a weekly chart, but I don't even know if you can paint that.
Even at that, there's just so much historically above 65. There's just so much historically. And so once you start getting into these ranges, we start thinking Putin. That's just what happens.
Yeah. Yeah, because he will sell up here.
He always does. No.
He will.
He will tell you, oh, of course we're not going to sell.
He will.
Of course we will abide by the agreements we have made. Of course we'll do all of that. Hey, how many barrels do you want?
Yep, that's right. And they've got him.
We got him.
We got him. We can't sell them.
So no, it's just you start to see some things as crude gets a little elevated that does give you a little bit of pause for concern. Gold, I don't have that concern.
I don't think I got to redraw my lines. I like it. I like it when you go to a chart, Frank, and you're like, okay, I still like the analysis. Pivot point, healthily developing. Matt, you've been analyzing this for a while here, helping us as a community understand what you're seeing in the gold markets. You've been all over it. After sticking this double bottom a month ago, this has been nice. And any gold trader cannot hate a couple of red down days here as we're just developing this trend. Frank, anything you want to add to gold here?
Nope, not at all. I mean, you love that it's, holding the breakout. Right, you had a chance to see the 9 flip around. Now the 20s trying to cross above the 50-day moving average. As long as we hold that pivot, from April 13th, 14th, any pullback is sensible. I would prefer, both technically and then as someone who likes gold, in general, it to hold this breakout point. That would be preferable in my eyes. But really, any pullback I would expect is just, not everyone's going to buy on the bottom, right? That first candle. Not everybody's going to buy on that little pullback that happened in mid-April. Not everybody's going to buy the breakout. We've talked about this. I know Matt's talked about it, where people are going to work into things on these reversals, right? It's usually, everyone's different, but not everyone's all in. Oh, okay, I'm sold 100%, right? So a lot of times we work our way into it. Maybe this is what I was waiting for, right? Okay, I got my break. Now I'm confirming my break. That next swing after that, whether it's the Cody special or a high base or whatever it might be, that's where I'm looking to come in. So this is really healthy price action. In my opinion, you really like the way it has behaved really ever since sticking that bottom, right? It's been very well behaved. And, as right now, technically can't see any reason why it doesn't stay that way.
No, and the dollar's certainly going to help gold, in my opinion, here as the dollar is trying to fight for that 24.5 support level, gapped under it. Now it's a little bit of chop during the cash open and through the trading day so far, but it looks like we're in another scenario where a low base gets absolutely destroyed by the dollar, and I fully expect the dollar to continue to fade down. I think that's going to put some pressure on the buy side on gold, and you could definitely see a scenario where the dollar does violate support and gold eventually breaks out of 1800 and you see some momentum above 1800. So, the gold analysis that we've had at Tackle Trading has been pretty spot on over the course of the last 3 weeks, and there's nothing in the data to suggest that we should shift our stance towards gold right now. When you take a look at the currency market in general, what you'll see, Tim, is some reflection points on potential reversal candidates within a lot of major currencies. We talked about the euro achieving that 120 mark. It broke out, it maintained all week, and now you're breaking out of 120.05, which should see some price appreciation into the 121.50 level, which will definitely bring that dollar down even more. But it's not just the euro, even though that's what we primarily look at. You're looking at a potential breakout off of a reversal in the Swiss franc. You're looking at the same thing in the Japanese yen. You're looking at a potential breakout candidates out of neutrality out of the New Zealand, Aussie, and Canadian dollar. And so There are things too, and I would have been impressed if you could keep up with your currency symbols while I talk about those currencies. No, you're just seeing some things in the currency market that you can clearly identify on the index itself. UUP, the ETF, is what we track at Tackle Trading in the halftime report. But you can definitely see what I'm talking about with those potential breakouts with the dollar breaking down, and you couple that with what is happening in the gold market because they are divergent against one another. You can really kind of see that lining up for 1800 potential breakout coming into next week, and I do think you have potential opportunity all the way up until you get into that 1850 level on this gold breakout. So I think it's one of those rare moments where I'm looking at a scenario and I'm looking at gold and I'm not thinking position long term. I'm thinking like, okay, short-term traders might be looking at 1800 here. Longer term traders are already looking at this reversal pattern. Everybody at Tackle's been looking at this reversal for 3 weeks. Most likely Wall Street's been looking at this for the last 3 weeks as well. So you can definitely see scenarios where momentum starts to build in the gold market. We're not out of the woods yet. You got to fight up against some pretty important resistance levels. And when you're talking about gold, you're talking about an international type product that can be driven through other means than the U.S. operations. But for me, haven't been wrong yet on gold in the last 3 weeks. I like the $1,800 breakout here, guys, and I like it from multiple time frames.
Yeah, love the analysis too, by the way, we couple with that currency analysis like you've been providing for a while. Let's take a peek at Bitcoin. And obviously, been some chatter around the crypto markets here this week, Frank. Last weekend, we got a little bit of a route selling going on as it brought it back below that breakout channel. Last time you were here, we were holding the breakout channel and behaving, but now here we are, Bitcoin acting like Bitcoin a little bit here, testing around 50K, and we've had a change in character. Frank, what's your read on the chart?
For sure. Yeah, the very next trading session after folks were talking about it starting to behave, right, technically, and says, hold my beer. That's blown everything technically out of the water, right? Now we failed the breakout. We failed the pivot. We failed a second pivot. We failed to hold the 50-day moving average. We're now below the 9, the 20 starting to round on us. This is going to need some development. Now, I'm not of the school of thought that I want to be a bear on Bitcoin. Don't necessarily mean I want to be a bull. But, that long-term trend's too strong, and some short-term price action, is not going to convince me to become bearish on it by any stretch. But for that next bullish leg, it just is going to have to develop, because right now, you're making some educated guesses, right? We've broken through all sorts of things. What's the one that's going to hold? The 45, 44, 45? Is that what holds? The breakout down at 40, is that what holds? Anything could, today's low could, this is Bitcoin for goodness sakes, right? Today's low could establish, and we could get a great double bottom a week and a half from now. But right now, we've lost all the momentum. We've taken out multiple levels of support or support catalysts in the form of the moving averages. This is one you have to be patient on. If you're not in Bitcoin, you're cool. You're like, I dip all you want, right? But we are going to need to be patient and let that develop, because right now, I don't know how you would construct a well thought out technical trade on this chart. Right now, I don't think you could do so.
You're gambling, you're hoping, you're begging, you're wishing, you're wanting, but it has nothing to do with analysis. At this point, the trend has been violated. The pattern has been violated. There is absolutely no analysis in any capacity that supports buying Bitcoin in any capacity right now. And if you like it at 49,750, you could like it at 30K very quickly. So this is a complete stay away at this point. Bitcoin, this is the first time Bitcoin has violated trend analysis in a long time. Yeah, so this is absolutely, we said this when it violated on the gap down of the futures market on Sunday. You stay away from Bitcoin until technically it tells you to get involved again. And right now it is screaming volatility, shift in trends, shift in mentality, and it should be treated with caution, in my opinion. There is zero analysis that would support a trade here.
There's no trade.
There is zero trade here.
There's no trade. There's no trade here. You got to be patient. You got to let this thing tell you.
And again, that does not mean Bitcoin isn't 65K tomorrow.
Nope.
What it means is there's zero analysis that would support that.
Yep. There's no probability. You don't have an edge. You're just guessing at this point. So be patient with the Bitcoin charts and the crypto markets.
And by the way, Tim, that was the case yesterday, the day before,
Mhm.
and on Monday because of what happened on the futures market on Sunday, violating trends.
Yeah. Been a rough week there for Bitcoin. Now it's got to have some development before we're interested in the next setup.
Well, it has had a rough week on the backs of massive appreciation.
Correct. Yeah. As a long-term Bitcoin
Some
holder,
perspective there.
I'm not over there. Well, you know me. Nothing's.
I'm not saying you, bro.
Nothing's going to shake me off.
I'm not talking to you. I've talked to you enough about Bitcoin. You don't listen to me.
Here's some context. I mean, me and Matt were talking about this morning, and Matt was like, "Well, Bitcoin might be 30K," and he wasn't saying that towards me like I would care. I'm like, I don't care.
You would buy more at 30K.
My personal strategy for Bitcoin is accumulation over the long term. That's exactly right. But trading wise, there's no trade here. There's just nothing in the pattern or the chart. All right, guys, let's get into stock talk next. And earnings roundup really is going to be the focus here today, Matt. There's not the Apple Googles of the world, but we got some interesting names here today: American Express and Intel and Honeywell. Where do you want to start?
Yeah, we're not going to get you an AMD today, but we are going to start with an Intel. INTC here, please. Intel reports earnings and just get crushed here on Intel's earnings. At this point, like, would anybody want to touch Intel's earnings? Intel trades like a penny stock on earnings.
It really has gone crazy.
Crazy. And Frank, that was not always the case with Intel.
No, for a long time. Yeah, it was just like, just whatever. Intel is just a
should
big
I
name.
buy a put option on Intel? What are you talking about? It's Intel. It never does anything.
Yeah, look at the last 4 quarters just on that note before we give the numbers. Big gap up. That's not usually Intel's character.
And Tim, and it's not, but yet you're still within like whatever expectations on market maker move, because Intel's personality has been a little weird in the pandemic.
In the last year, yeah.
But Intel comes out today and they actually reported $1.39 against the backdrop of 115. Revenue came in at 19.7. And Tim, forgive me, Team Tackle, I did not get the extended detail on earnings today that I usually do. I just have raw numbers here today. Blame Frank for talking about the NFL draft earlier.
I'll take it.
Intel comes out at $1.39 versus the expectation of $1.15. Revenue came in really healthy at 19.7 billion versus the expectation of 17.9. That basically resulted in a break even over the course of the year-over-year revenue. They also reaffirmed guidance. And again, I don't know the context of what was said or the hypothetical we're going to be doing this in the future. I didn't get that today on Intel, but for right now, I mean, this is a pass and a pass on the actual raw numbers. You might have some context to provide on that one though.
I have a little bit. I read through a couple of Pat Gelsinger's comments in the Q&A session back and forth, and also they did reaffirm their yearly guidance, but they lowered their quarterly guidance by about 4 cents.
Oh, hold on, I read that. And
did they do the trick? Was it within the window?
I put in my notes, they reaffirmed EPS and revenue guidance. And I noticed that there was a couple pennies shifting on the quarterly. I did not care about that. Literally, we were talking about within ranges, Tim.
I just don't think they provided enough for the market to get excited about. Last month, Pat, because the whole conversation with the CEO was what's going to happen with this new $20 billion project? When are we going to get revenue from it? The analysts were pinning him on it. And he basically had to say, guys, it's going to be a long time. We don't see that as a 2021, answer immediately. This is a long-term project.
I know,
this is a transition year, that kind of stuff.
We're talking about the growth side of Intel, and that was always supposed to be 2022, 2023. So I get it. Everybody wants immediacy in the world.
Yep.
And if they don't get immediacy, it's like, oh my goodness, sell. Their raw numbers supported price appreciation here. And simply because traders are a little spoiled, because we can be spoiled little brats sometimes. Give it to me now.
Every quarter, Matt.
Right?
Don't we need it beat every quarter and raise guidance every quarter?
They did beat. Intel did beat. Intel beat on EPS numbers by over 10%. They beat on revenue numbers by close to 10%. Literally right at 10%. They reaffirmed their guidance. This is not a company that went gangbusters in the last year. This is a company that has had wide range neutrality for the last 3 years. And so for me, Intel's got a lot of rust. It's got a lot of rust. It's going to take some time to shake off that rust. It doesn't have the nice shine of a new car and the smell of a new car like some of these other semiconductor companies do. It's more the value long term. It's supposed to be the safe haven, but at this point, like who even knows where Intel's going to go at this point with that gap down on these numbers, because these numbers were fairly decent.
Yeah, it throws any trading analysis off here, Frank. I'm thinking more Intel from a long-term perspective in my personal stuff, but
yeah, I mean, it's the one
even
thing
at that though. I mean, not anymore.
I don't have any positions on Intel
Yeah.
yet, but
No,
if I
I don't
ever would
either.
be, it would be an investment probably.
Well, it looks like maybe it's a mark thing, because it did, go into the 20 weekly. It gapped into the 20 weekly and kind of is holding its own. I don't know if Intel's Mark's cup of tea these days. So there's that you got going for it. But yeah.
Can I play Mark?
Yeah. Let's hear it.
I don't like Intel at $59.32. I mean, who in the world would like Intel at $59? But if it drops the 5 and just goes down to $9.32, I'm gonna love it.
If I could get it in the 20s.
No. Just eliminate the 5, go to 9.
Right.
That's deep value. Eliminate one number from the price.
90%.
I see how that
number.
works. Okay, I see it. I was missing that step.
Yeah, it's just eliminate the first number. That's deep value.
All right, enough of Intel. What's next?
Let's move on to Snap here. SNAP. Snap comes out revenue beat 769 million versus the expectation of 742. Revenue EPS numbers came in at -5 versus the -2 expectation. That resulted in a 66.4% year-over-year revenue increase. Lukewarm report here from a raw numbers perspective. Snap's not one of those companies that's been the high flyer in the quarter. It's been very choppy in the quarter and not unexpectedly a little choppy on the price action today as well.
This one's interesting maybe a couple of weeks from now, right? When I see this chart, what kind of jumps out to me is that 64.65 resistance, which and this little pullback that we had here and the lows that we put in earlier this week. So I kind of start thinking, if we hold these lows, if we can hold these lows down here in that 56.50 range, work our way back into that resistance and push through that resistance, there could be a breakout candidate here in a couple of weeks if that price action develops the right way.
Yeah,
right.
Put that on a weekly chart real quick, Frankie or Tim.
Mm-hmm.
You can see some action, some live, getting out there at 65, north of 65. Yeah, I can see that. So Snapchat's not my cup of tea though. I agree. I'm not a huge Snap guy, but they can wiggle and shake. So I'm going to be watching that low this week and that 65, 64, 65 range that you brought up there, Maddie. It tells me I need to watch your Twitter handle when that breaks out.
You'll have to. Yeah. If it ever pushes into that, I'll be sure to tweet it out.
Here's how it's going to work. If I catch Frank's tweet on Snapchat, I might catch a trade because I don't look at Snapchat every day.
There you go.
That's right.
So that's how it works. Let's move on to CE here. Now, unlike Snapchat that needs some time, CE, SE,
Celanese. Man,
you love SE so much. You have this Freudian response to SE. You're like, C Limited is going to be the next activation.
Look at that breakout developing.
Don't at me. CE here, unlike the volatility that needs to be shaken out of Snap, here is CE, Basic Material Company, reports earnings of $3.46 a share versus the expectation of $3.01. Revenue came in at 1.8 billion versus the expectation 1.7. Increased revenue 23.2% year over year. And Tim, the trick on earnings.
Yep,
on the guidance, right? We know the trick.
Move the little range just to trick it.
We know the trick. CE didn't do that. Increase EPS, increase revenue guidance. Nothing to dislike here. And the only thing I would have disliked is a gap up. We got a gap down and a fight back up. Frank, give me your technical read. I think you and I both like this trade.
Yeah, we were talking this one a little bit in the pre-show. This is one of my favorite things is when a stock gaps down on earnings and it's immediately bought up in a good frenzy, right? People woke up, were like, what's going on here? Working right back into that 160 resistance level. That's a very clean breakout candidate, in my opinion. Couple that with the earnings behind us, and gotta like what you saw there, as you pointed out. Couple that with the firing back off of, for whatever reason, a decent gap to the downside. The only question or issue that I have from it technically is because of the way we developed today, because of that fiery price action off of those lows, where to put a stop loss becomes a little bit difficult, right?
Yeah.
There's not that's where you put it, right? Everybody's probably going to agree with that, but that can be remedied with just a little consolidation for Monday, Tuesday, right? Just a little inside candle somewhere before the breakout could give us something to work with there. I really do like this as a breakout candidate. If it breaks Monday and I can't figure out a good place for a stop loss, I'll still like it as a breakout play. I'll still just be looking for the next swing. I really think that technically this is a very good situation. Personally, I do like this chart a lot. I do like the way we fired off those lows.
I agree. You can't put a stop loss underneath the low of today. You'd be taking too much risk there. But you do have a couple levels. If you don't get your doji breakout where you can look at an intraday low and put a stop loss there, keep an eye on 154. 154 is an intraday support level, a very clean intraday support level. It also coincides with a fairly important resistance level between 154 and 155. So I do think that 154 could be a nice stop loss placement. Obviously, you can't get it underneath the low of the gap that happened on earnings, but that 154 level intraday is interesting enough that you could put a stop loss under there with this 159 and change breakout that we're looking at on CE.
Sure.
But I do agree. I do agree that you give another 1 to 2 day consolidation underneath that breakout channel, you're going to solidify that intraday analysis a little bit more to really understand where to put a stop loss. But I still like 154 here from an intraday if you don't get that. And by the way, when you're looking at this space, the chemical space, pretty decent little space. Honestly, and Frank, you tell me, do you like the breakout of 159 on CE post earnings, or do you like the potential breakout on APD?
I was looking at APD.
Ooh, I have to pick one or the other.
If you had to pick, if you had to pick, because these are the two best looking potential breakouts in the chemical space.
Yeah, they're both very, very nice. Ooh, it's like picking between your kids, right? At least I'm told you're not supposed to do that.
No, that depends on the day. Some days it's really
Some days it's very, very easy. Well, you're still not supposed to do it. That doesn't make it hard, right?
I'm an honest parent.
That's tough. That is tough sledding.
Got to pick one. You got to pick one.
Got to pick
you
one.
Take
I'll
the momentum post earnings on CE.
Probably.
Just line up on the breakout on.
I probably take especially if I can get just a little, like you said, solidify that 154 range through just 1 or 2 candles. It wouldn't take a lot. I think if we just fire through, risk reward might favor APD here. But as it currently stands right now, and I had to pick one for Monday morning, they were both hitting those entry prices. I probably would go with the momentum play on CE.
It's close for me. Yeah. It's close for me. Tim, what would you say?
I think if I'm building a swing trade, I would take CE. If I'm building a position trade, I'd take APD. So I would pick CE. I see that as a really good potential swing trade. I love the trigger here. I love the post earnings here. And I love the market response, from earnings. That tells me buyers are stepping in. And if we can clear resistance, I like that trigger. So
it tells you if some people woke up today and was like,
no, buy.
What are you looking at? Yeah. Like, what are you
They got a sweet deal. Some people woke up to a sweet deal this morning.
You guys are selling these numbers? What are you doing? Yeah. So there's a little bit of that. I love the cleanliness of that trigger on APD. Like that's a pretty solid resistance level that if achieved should see some appreciation.
Sure.
But you can't see it. There is a blue dot coming up down the road.
There is.
And again, you can still swing trade that, but I think it would eliminate the position trade because earnings is coming up a little bit. Yeah. Which you can hold through earnings on a company like APD, but recent history Kind of gives you a little.
You can until you can't, right? That's why
Yeah,
that's
recent
why there's those
history.
rules that, you know, I don't hold a swing trade through earnings, no matter what crazy justification I try to give
Listen.
myself.
Yeah,
Which I do.
all
I
the
think
time.
we all do. I
All
think
the
we all
time we
do.
do.
But it's a utility stock.
But it didn't gap yesterday. Like, yeah, we all justify it sometimes, but I get your point there. I'll go with I really like that 290 breakout there on APD, but I do think the snapback response is probably a little bit better for a swing trade. So I would take CE for the swing
Come
trade.
on,
as
peer
well.
pressure. Join the party. We all had.
I don't give in to peer pressure ever.
You want to go APD just because.
In fact, when people try to peer pressure me, what usually happens?
You take the opposite.
I will take the opposite.
Digs in. Yep, he digs in, even if he
Pride.
doesn't believe it.
What's more important, your pride? Yes, it is 100%. Let's go ahead and go to SKX.
Skechers.
Little Sketcher action today.
Huge pop too.
And that's why you get a little Sketcher action today, is because of the huge pop. Wanted to put it on radar a little bit. Got to like the market response here. Earnings numbers were really good, actually, and support the type of gap that we saw. Obviously, any swing trade is going to take some time, and I want to get Frank's take on that. But let's just go through raw numbers. 63 cents against 49, 1.4 billion against 1.3, 15% increase in year-over-year revenue, and a increased guidance. Frankie, swing trade out of the, need some time to set up, but just give me your take here technically on Skechers.
Yeah, see, this is why you always try to talk yourself into holding through earnings, right?
Is that what you're telling me to do with everything?
No, but that is why. Yeah, see, that's why you can get away with it.
Yeah.
The Skechers is obviously, this is a tough thing going into in the very very near future. A gap like that, we need to let it digest. A couple interesting things though about Skechers. They have an all-time high, just somewhere I think just shy of $55, going back 5-6 years now. So working into that turns it into maybe throughout the quarter a big breakout candidate of all-time highs down the road. Right now, it's got time to cook. So, as I say many times, we can consolidate. We can kind of, create a little bit of a consolidation pattern up top. We can pull back, let the 9 keep up, catch up with us. Hard to tell. I'm not the dude that's going to buy the day of the gap.
We're not chasing Skechers.
No, I wish I would have bought it yesterday, because I'm not an insane person. I wouldn't have, right? Because rules are rules for a reason. Believe me, if you think I didn't catch these guys last week, though, that was a beautiful breakout candidate last week. They just had earnings, right?
So, and I do think you need some time here.
You do, absolutely.
You need some time here.
Whether it's consolidation, some sort of a pullback.
There's a couple scenarios that are really, really saucy patterns here. One, a gap fill would gap fill to the old resistance channel that it just broke out of, which would be very sexy. It would be very
on the gap
sexy.
out, for sure,
very sexy. But in fact, you got the gap out range right at 45. Tim, put that on a weekly chart again.
Mm-hmm.
Coincide 45 with the old resistance.
Mm-hmm.
That would be very sexy.
That would be nice.
The second one, though, is more momentum based, and I think could be really, really good as well. And that's a high base if 50 holds.
Mm-hmm.
And then you can see a scenario where you consolidate, show the strength at the top of the channel, ultimately break out of that all-time high with momentum. Either way, the reason I wanted to bring up Skechers today was simply because of the momentum today and the combination of that second pattern that could develop post earnings. It's going to take a week or two, in my opinion. But Frank, I'm willing to bet we're talking Skechers next week for on reports.
It might be a
week
couple
after,
weeks
maybe
later,
a week after.
But yeah, I think that it is definitely worth getting on a watch list to see what kind of transpires in this range, because that is a very interesting potential trade. It's just we're thinking way ahead of ourselves, at least right now, right?
Oh yeah, but isn't that what we do?
Of course it is.
Project.
That's what traders do. We project things.
That's right.
Okay. Last, certainly not least, American Express, AXP revenue 9.1 versus the expectation of 9.2. So a rare miss in earnings on revenue, guys. When I mean a rare miss, they're beating at an 82, 83% clip right now. And so it is a rare miss on the revenue side, but they did officially miss 9.1 versus the 9.2. That did result in a 12.1% increase in revenue year over year. EPS came in fine, 1.74 versus 1.68. Quite frankly, American Express here today, who cares? They came in basically in line when you really kind of look at their earnings from a complete perspective.
Yeah,
I don't have an issue with their earnings, and I still think 150 is absolutely tradable.
I agree with that 100%. There was nothing they did to inspire anything, right?
Nope.
But they didn't do anything to take them off your
No
radar.
double takes.
It's still an American Express breakout at an all-time high if it happens. So a couple weeks down the road, Frankie, I'm interested in this. So absolutely.
A couple weeks down the road, maybe a week, maybe two again, but a couple weeks down the road, you're going to be looking at a cup and handle potential consolidation pattern with the clean breakout at 150.
Yep, I agree.
Yeah.
Yep.
That's all I had for earnings roundup.
That's it. I only had one corporate item. Silicon Labs, another M&A, little bit of activity. They're up, because they're getting bought out by Skyworks Solution, SWKS. M&A activity always grabs my attention. The deal is going to be about $2.75 billion in cash for their infrastructure and automated business units. Skyworks is going to be picking those units up. And a rare, both of them gapped up on the news, which is always interesting when you see it. Frankie, Friday, though, we got to move right into your charts. This is something then that Team Tackle comes out each and every week to try to take a peek at what you're putting out there. By the way, if you're ever following Team Tackle on Twitter, at Tackle Trading, Coach Frank does run that Twitter account, puts a lot of these charts up throughout the week as they're developing and what he's seeing there. Frank, you're
Sure,
up, man. What
certainly invite you to join us over there. Ooh, let's well, we already talked CE, which is definitely one I wanted to talk about.
Can we talk SC?
No, but I'll tell you what, I will talk CRM with you.
All right.
Hold on. Frankie. There's some inside baseball going on right now. Tim is so happy somebody's finally willing to talk CRM and not make fun of him. This is a moment.
Hey, I've been pulling for them for a long time, Tim. You know that. You know that. Even when they were looking pretty rocky, I was trying to put up the good fight to say, hey, listen, you might not want to buy them, but you don't have to.
Frankie,
to sell them.
I was there for your jokes.
Okay, well, listen, there might be a little revisionist history in here, but not all of it is revisionist history. But I mean, as a long-term holder that we all know Tim to be on CRM, you definitely have to be liking the way we have, came off of those lows after putting in that double bottom. After that initial double bottom breakout that happened back at, very, very end of March, we've really, unless you were just playing a momentum chaser, really have not had a lot of trade setup development. Would you agree with that, Tim?
Yeah, there's not really been trade setups.
Yeah,
I mean, you could have potentially very aggressively traded the W pattern or something, but I don't think it was there, to be honest. But there's not been a lot of trade setups for CRM for a bit.
Right. It's been it broke and it ran. Right. It broke and it ran. You basically had to kind of get in on that first day of that W break, or you've just been Tim, smiling quietly and being very happy about it. Well, with the development we've seen over this past week and a half here, putting in a little bit of a trading range in some ways, obviously well behind, the S&P 500, but in some ways the same type of a, situation where we've taken that breather, we've put in a little bit of a consolidation here, Tim. I look at this and I see 250 as the next level of resistance, and I don't see anything on this chart that would scare me away from that. I can't see any reason from a pure technical point of view why CRM isn't going to 250, which leads me to think maybe playing a little breakout of this consolidation range could be something that I could look towards doing from a swing trader's perspective. I think we have a little bit of time here, about a month? You probably know better than I until earnings. Could I talk you, Tim, into talking me? Because I know you're already here, so you'll benefit from the breakout. Anyway, could you talk me into playing a little break, targeting into that 250 range?
It's a good question. There's a couple of questions I have for you though. Being a CRM long-term investor, I'm a holder. Anybody out there who's watched the show long enough, you probably have heard me talk a little bit about CRM. I like the company. I love the business model. I love their revenue models, by the way. Topping 20 billion just last year for the first time. And I believe in Mark Benioff leadership. I really do believe in him. So I'm an owner of the stock. There's one thing I've been watching the stock for the last 6 months, Frank, and I want to get your read on this.
Okay.
Is this channel something that you care about?
Let me draw my own line, right? Because when it comes to channel lines, maybe mine's already broken. And I think that's the underlying issue when it comes to the channel line, right? A little bit of artistic license. I think that's fair. I do think that's a fair thing to evaluate there, Tim. I would counter your argument with, if we follow through on this break, because we're just right into that resistance here today, right? This might be it. I hope not for your sake, but it might be the end of the road. I would kind of counter that with, if we break through this resistance, we're also taking that out overall. Again, we can
That's a better line,
right? You can.
Your second line was a better line.
That's the thing with the trend lines. They're very helpful, right? But they are more zones,
they're guides,
right, than the numbers, because mine probably would look a little different than Tim's, even and his would look different than yours, right?
Can I say it like this? You like the consolidation as it played defense against the 200-day moving average. That's why you liked it. You like the breakout that is occurring today, and subjectively, you also like the fact that it's breaking out of your random arbitrary line you drew, which just supports your decision to buy in the first place. That's all that's happening. Everything is done on that price, though. Everything else just is there to support your decision from thesis. An emotional perspective.
Sure.
Yeah.
Of course, you can sign me up, Frank.
Yeah.
That's your question. Very simply, very directly.
I appreciate it. And, the thing about CRM, is it wasn't all that long ago. They've had some recent struggles, but, beyond that 250, they've got, resistance all along the way into that 275, 280 range. So, this could be the beginning of the working back towards that, right? Obviously, that's probably not one swing, and we'll take it one leg at a time. But I did think that was interesting, and I felt that this was the first time since the initial W break, which is pretty aggressive. Obviously, I wish I would have taken it.
Yeah,
but it's pretty aggressive. It's not going to be the type of trade everybody gets into on that. I always kind of look at hey, that's your first signal, and then the next trade setup is the one that's really interesting to me. These guys just kept chopping through all the things I would have been looking for, right? No consolidation, no pullback off of the 50, blows right through the 200. And so I do like the consolidation here.
I think for most people, if CRM is your version of gold for me, you're nailing that double bottom and you're nailing that breakout the same way we nailed it on gold.
Correct.
But CRM's agree. Not that for me. And so it's really the secondary type technical moves that we catch. And this is exactly that secondary technical move. So if you miss the double bottom breakout, this is what you've been waiting for. And so if you like CRM, you take the trade.
Agreed. Yeah, I agree. I thought it was interesting, and I'm pulling for him one way or another, Tim.
I'm pulling for him as well.
So no matter what you want to do, we're always cheering for you, Tim. All right, let's look at fast. We had a couple folks bringing it up in the chat, and definitely an interesting looking candidate here. We just broke out of a little bit of a cup and handle. I think probably technically, if we're getting super specific, maybe we broke out on Wednesday, but it would have depended on you, right? Some people would say Wednesday, Thursday, some people into today. Definitely like that price action movement on the breakout here on Fastenal. This probably becomes a momentum play to me, where coming in off of today's high and using probably the 9 along with the today's low, or that would be today's low, getting my stop loss a little bit below that 9 EMA and try to play this from a momentum point of view would probably be the way that I would be looking at it. But you gotta love the break of resistance. Definitely a nice clean candle here today. I think I would want to compare them to some other folks in their area, right? Because
that's what we do.
Can't take them all, right? Yeah. And so that process would still have to be done. But I do like that we're coming out of a cup and handle on these guys, which was kind of off of the tails of a failed breakout, right, going all the way back into January. I remember that one too, because I was around for that one as well. But yeah, Jonathan, Linda, this one is definitely an interesting candidate, I would say.
And let me add to this one as well, because when you're looking at the daily chart, I certainly agree with Frank that you're a little bit overextended. You do not have a clean technical setup on the daily chart on that breakout, and thus you probably do need to treat it momentum based, right? Momentum style swing trading. However, I look at this on a little bit of a longer time frame on that weekly chart, and you can really dial in that breakout there. And I got a little bit of a different read on that weekly chart. I think it's fairly clean on the weekly chart. You got some consolidation over the course of the last few months that you're breaking out of. I like the price level that it came from in the breakout, right south of $50. And so I do think you can momentum trade it from a swing trader's perspective. You got to like that price action you're seeing here on the breakout. But from a weekly perspective, I like this as a position as well. I think you do have multiple time frame analysis that support swing or position. It's really up to the eye of the beholder at this point, but you do got supporting evidence from a technical perspective.
Love it.
Yeah, absolutely.
Yeah.
Absolutely an interesting one. All right, let's do a few more. But yeah, I'm going to steal that one, Jonathan. Nice find there, my friend.
Good job, Jonathan.
Let's take a look at HPE, Tim, Hewlett Packard Enterprises.
Okay, juggernaut recently. Obviously, we've talked a little bit about it. This thing doubled in the last 6 months. So
we had this on our stinking report for 3 straight weeks.
Yeah, for several weeks. Some finally breaking out here today, obviously breaking through that. We did break through yesterday on the intraday, weren't able to hold. But one thing that's really stood out is look at the accumulation on the volume over the last couple of trading days, including the day before it even tried to break out. We've really had a lot of volume coming in the day before the breakout, then a good chunk of volume yesterday on the, sticking our nose above that resistance level, right? Getting those more aggressive traders in, looking like pretty clean, confirmation candle here today, if that's more in line with your rule set. One thing with these guys is I've been looking, kind of at 17 as kind of the next gravitational pull. If we can break that, just approximately 16. I know it was a little bit north of that, but resistance wise, I don't have resistance until closer to 1740, 1750. So I still think there's a little bit of window for us to work with here on HPE. Gotta love the volume and the people that are apparently jumping in for one reason or another, saying, yeah, let's front run this thing. Let's rock and roll. Been on the reports, like Matty said, for several weeks. I know they've been in. I've been watching these guys for a breakout since like the beginning of April, right, when they were first up at the top there. And so nice to see a little bit of follow through here today. What you think, Matty?
Yeah, it's been on our reports for 2-3 weeks now. It's just got such a clean breakout channel. It's fairly rare you see that type of cleanliness at your breakout. So it's obviously an interesting candidate, and you are confirming. You tested above yesterday, came right back down within the breakout channel. You're most likely going to confirm today. I think it's a pretty easy call here.
Yeah, that one's
great chart.
Pretty chalk, right?
Yeah.
Another one that's maybe a little. It's very interesting, but it's maybe a little tougher depending on you, is TJX, Tim.
Ooh, there's some retail names popping off.
Yeah, retail. Today. I mean, you've seen things like, AOS and things like that just going nuts lately. TJ, they used to be TJ Maxx, right? Now they're TJX. I still want to call them TJ Maxx. Working into a pretty clean level of resistance. Might be one of those, and I think probably speak a little bit for you, Maddie, where maybe a little consolidation and then a break would be more appealing to you than, say, breaking out on Monday, because we're not super extended, but we did, fire off, the last 3 days pretty nicely. But I do like where we are, just a nice, clean, several month consolidation period breakout candidate.
Frank knows me well. I don't like being the catching a trade on a breakout the 5th day of the breakout. You are right. I would like some consolidation going into that, but you gotta like the prolonged nature of that resistance channel at 70 and anything above 70. I know you've tested a couple times, but what you haven't really done is close with some momentum above 70. Correct. I think you close above 70 towards the top end of the range. shows you something about the buyer's thirst above 70. And so I think you got some legit analysis above 70 here. And I don't think you have to worry too much about 7106. A close towards the highs above 70 is good enough for me here.
That was the tail of the day before earnings, right? There's not a lot of
that's
supply in the
volatility
market
and
right
craziness and
Right.
could be a tick. Just it just discount it. 70 is the number to me.
So yeah, I think that's fair. I think that's kind of about where I would have that one as well. Anything you'd like to add there, Tim?
No, I love the longer consolidation. I want to look at the retail stocks today. I know during our scouting report meeting, we will have a conversation about some retail companies, because as I was doing my scanning, several of them stood out to me. TJX is one of them. You have earnings here. And one thing you can kind of do, guys, obviously we set our charts up in Thinkorswim to give a little window over here so we can know that earnings aren't immediately coming up. But earnings are probably going to be mid-May. I bet we've got time here to do something here, Frank. You know, to build a trade out.
Yeah, they're like late May, 26th of May is what I have for them. So yeah, there should be some time. May never break it, right? It's hard to break resistance. Sometimes we forget that, but it is anytime something's kind of knocking on the door of the top of a multi-month range, I think it's worth getting your eyeballs on it. All right, let's maybe do one more here. Let's go ahead. All right, one more. Let's go with Anthem, ANTM. We've just seen some outrageous upside movement in these healthcare plans lately. We've talked about it quite a bit. This would just be a little flaggy style off of that 9 EMA map. Basically, momentum trade in Anthem while the momentum is there. I mean, the whole space has been hot. Anthem has its earnings behind us, if I'm not mistaken. I would have liked a little, maybe one more candle, but I still might get that. It looks like we're maybe trying to do a little bit of a very, very shallow flag, momentum style into that 9 EMA.
Oh man, these healthcare plans have just been absolutely juggernauts.
They've been monsters.
History, and has been really kind of carrying that sector. And it's why this sector has been doing so well. They've been literal juggernauts out there. So I am certainly not going to be the trader that is going to try to pick when that momentum ceases.
It's not a good bet, right? I mean, sooner or later it will, right? And it might be
guaranteed.
Now.
It always does.
It might be now, but any time. And I thought they were probably the one that would have been the easiest to build something, at least as of today.
I got a question for the two of you though on this one.
Sure.
If it develops into a further retracement, do you like it less? Like if we don't hold the 9, we don't hold the old breakout, but we come back to say like 365-ish down to this 20, would you like it less or would you like
I'm not a fan of high bases or flags that turn into really challenging bullish retracements.
I would agree. As it is right now, I mean, a lot of it would depend on how it looked when it got down there, right? But on its face to the question, I would like it a little bit less. I want to see it hold high, and come out of that flag as higher rather than lower.
Yeah, once you've solidified your opinion on what pattern it's going into, if it breaks into a different pattern, it always is difficult because the analysis failed at some point. And so again, if your read is a high base and all of a sudden it's not a high base, the beginning point of your analysis was flawed. It did not prove out. Now, maybe that was one of many variables, but again, it did not prove out. And so instead of just chasing the same analysis that did not prove out, you probably are better going to find a different stock.
I agree. Hopefully the pattern just holds up, but then it's not our job really to hope. I'll catch that word I use. We'll let the pattern tell us when to do something with it. But I see it, Frank.
And honestly, the only question, I know he's getting done here, but the only question I have for you, Frankie, is this. On the healthcare plans, do you want Atman or do you want United Health? Because I like United Health's $400 breakout.
Ooh, that's tough. And they are going to go the same way.
They're going to trend together.
They are. I prefer Anthem, but I would have no objection to somebody preferring United. It would really be
sixes for me.
It would be. Right. It is. It would be the name, right? The psychology behind the 400 break. I mean,
that's it for me.
You're splitting
right
hairs,
there. Right? The name I actually like, and it's probably just because at Tackle Trading internally we call it Ant-Man.
We do. Yeah. I almost called it. I just I might have called it that when we brought it up.
I kind of like Ant-Man. I could care less about the company. I just like the name. So no, for me, it's the $400 psychological high base breakout with the eye of the beholder on this one, but I like the trigger on United more than Ant-Man. But again, it's sixes.
I love healthcare right now. So
it's strong. Yeah, it's looking very interesting.
Awesome. I love Frank's charts.
Frank's
Charts
charts
always gets me ready for the scouting report. Like
I know
if
I
you
always
were to
get
do
up early and I'm like,
any other segment on Friday as we go into that scouting report. If you do Queen's Court, if you do, trash that makes cash, if you do, Jedi options, if you, what are we calling Greg's? Buy, hold,
buy
dump.
one, hold one, dump one. Yeah,
we got to get a better creative name for that one. That's maybe a little too descriptive of a name. But don't get me wrong, I love those games we play here. It really kind of gets us into the discussion and analysis. I do love them, but Frank's charts, they get me fired up for the scatter report meeting. Yeah, every single time, because they get me thinking about, well, what about this? What about that? Let's cross compare. I just love it. Frank, honestly, thank you so much every single Friday for coming on, sharing your wisdom with the team. It is very much appreciated by everybody. So thank you very much.
It is certainly my pleasure. It is a joy to be here. So you're very welcome, but the honor is mine. It's always a good time. It will be earnings season these next couple of weeks, right? So it's going to be really normal, folks, that there's not as many candidates in your watch list. You have things that like, well, if this, and this happened, then I might like it, right? So it is that time of the quarter. So don't feel like it's just you that are running into that. I can't find anything. It's annoying, right? And believe me, next week at this time, I'll be kind of turning the corner. But this is the week I like the least, right? It's too many, not behind most enough for setups to have developed, and still so many ahead of us. Like I said, like 170-ish S&P companies, including some massive names coming out tomorrow or coming out next week. So we've almost made it.
There's a reason for the last 10 years of my life, I take a 2-week vacation in October during the third quarter earnings season. I'm done. Like at that point, I'm done. Like earnings done.
Oh, come on. That's when Disneyland weather is good.
We're not going to talk about, hold on. Inside baseball. We're not going to talk about the wife's intentions. These are my intentions. I make the choices Florida, here. My Southern family.
October is beautiful weather in both locations.
We're not saying where we vacation.
I make the decisions.
Hey, listen,
I decide.
Frank's chart is
none of that is true, by the way.
Frank's charts is a segment that I watch. Even if I miss it here live, I always rewatch. I've really enjoyed the little segments you guys have created on the halftime report. And if I'm not there, I watch them. They give you ideas, right? They give you ideas.
And that's all what you want. And that's all it is. You get ideas. You can kind of take and run with them.
Cool. Marky.
But this is accurate. I have literally never chosen the vacation spot for my family. That is accurate.
We know.
Breaking news, right?
I'm gonna puff my chest out right now, though.
By the way, I don't think I've ever chosen it for my family.
Thank you for making me feel better on this day.
All right, Marky, coming on in here. What you got going on? Promote anything?
In 1 hour and 9 minutes, doing Commodity Report Live and Mind of a Trader at the closing bell, 3:00 Eastern we do that last hour before the trading week closes. I enjoy when I get to interact with students. And so doing that in 1 hour and 10 minutes.
Frankie, final thoughts from you, sir.
Just be cheering for the Broncos to find a new quarterback on Thursday night. When we meet again, I will know who the Broncos have drafted. I'll probably be disappointed in their draft pick, but excited at the same time. And
if Frank
I'll
comes
support
with
whoever it is.
If Frank comes with like 10 bear picks next week, you know how his Thursday night went.
Listen, I'll get over it super fast, right? Why did they draft that dude? And then by the end of the night, I'll be like, this guy should have went number one.
All I'm saying is if Frank brings WWE on a bye next week, he did not like the Broncos draft. That's all I'm saying.
There's some risk within friends on draft night. What if my Bears trade up to go right over the Broncos and take your guy, Frank? Are we going to be
we'll laugh at the Broncos.
No, I'll be thankful. I'll be like, the Broncos were going to take the same dude the Bears were. Thank you, Bears. Thank you for dodging that bullet for me. Are you kidding me?
I'm already hearing the trash talk. I can't wait for the NFL draft next weekend.
Oh, dude, we'll be watching it on Zoom.
We'll be talking a little bit on Zoom. But stay on top of those earnings, folks. And you guys, I know Team Tackle is all about that, so I don't worry about that. And if you are, annoyed at them as me, just realize that it won't be too long till they're in the rearview mirror and we'll be back to business as usual.
Maddie, take us out for the week.
Guys, thanks for coming and supporting Tackle Trading and being a part of being the best part of Tackle Trading. That is our community. And if you're not part of Tackle Trading yet, go out and check out everything that our pro members enjoy, from the scatter reports, which we are going to literally be doing for the next 6 hours right now so that you can enjoy them over the weekend, or all of our webinars we do for the pro member community, or the education we provide. If you're looking to learn technical analysis, if you're looking to learn options, if you're looking to learn these things, we have a bevy of education for you at Tackle Trading. And what I would start with as a pro member, if you're very new to the market, I'd start with Technical Analysis 101. I'd get into the Options 101, Futures 101, Forex 101, System Development 101. All of these are 2-hour on-demand courses that you can take at your leisure on your time. And so you can start to learn the foundational principles of trading, investing, and the way Tackle Trading approaches the financial markets. And all of those are for pro members. Obviously, we have our paid systems, and we have coaching, and we have one-on-one programs that help people navigate the markets. But I would start with the pro membership, and I would start with from the educational side, getting into those 101s. They are a fantastic way to start your education with Tackle Trading. So have a great weekend. Thanks for coming out all week, guys. And the weekend drill, it is all about the scouting reports in the newsletter. And outside of that, personally, I'll see you guys on Monday. Have a great weekend.
Fantastic. Great job this week, Matt. Great job, Mark. Great job, Frank, today. Appreciate you being here. And young Tanyan on the back end producing. Wonderful job as always. We'll see you guys on Monday.